Welcome to the Millennial Capital YouTube channel.
Today, we're diving deep into a topic that's essential for anyone dabbling in the world of investments, the yield curve inversion.
Flattening yield curve has been kind of an overhang.
Inverted yield curve. Yikes.
Inverted yield curves can often, but not always, predict.
Now, hang tight, because even if these words sound super technical, I promise by the end of this video, you'll get it. So, buckle up and let's break it down. What is bond yield? First off, when we talk about bonds, think of them as IOUs. You lend money to the government or a company, and in return, they promise to pay you back with some interest. That interest rate is what we call the bond's yield. The yield basically tells you how much you stand to earn from your bond over its lifetime. And you know us, we're always about that return on investment. The yield curve, what's that? Picture a graph. On the x-axis, we have the time to maturity, from short-term bonds like a month or a year to long-term bonds, think 10, 20, or even 30 years. On the y-axis, we have the bond yield, or the interest rate. When you plot the yields of bonds with different maturity dates on this graph, you get a line, and that's your yield curve. In a normal world, this curve slopes upwards, meaning as the bond's time to maturity increases, its yield goes up. Why? Because usually, people want more returns for locking in their money for a longer period. It's like saying, hey, if I'm lending you my money for 10 years instead of 1, you better pay me more interest for that commitment. Getting your hands on the data. Now, if you're a data nerd like me and wondering, where can I find these magical numbers, look no further than our central bank's weekly report. They have all the juicy details on the bond yields. It's public info, and trust me, once you start tracking it, you'll feel like you've got a crystal ball into the financial future. Now, let's bring it home. As of October 1, 2023, our local data tells us that the bond maturing in 2023 has a yield of 16.5%, while the bond for 2045 is sitting at a yield of 12%. Seeing this, you can already guess, we're looking at an inverted yield curve right here in Sri Lanka. Predicting recessions? Tell me more. Here's where it gets spicy. Historically, an inverted yield curve has been a pretty accurate harbinger of a coming recession. When short-term bond yields become higher than long-term yields, our curve dips downwards, and that's an inversion. It's like the universe flipping the script. It means that investors are less optimistic about the short-term economy and are willing to settle for lower yields in the long run, just for the promise of safety in uncertain times. Think of it as a sign of caution in the air. Inverted yield curve, what's it means for investors? In simple terms, an inverted yield curve might mean it's time to be a little cautious. It's not a direct, the sky is falling, signal, but more of a, hey, the weather might change, maybe grab an umbrella. For us investors, especially if you're playing around in the stock market, this can be a cue to diversify your portfolio, maybe lean into more conservative assets or just generally be on the lookout for any shifts in the market. Currently, as you've pointed out, the Sri Lankan government bond yield curve is inverted. For investors, this can signal a few things. Caution, the market is possibly predicting economic downturns or at least some uncertainty in the near future. Opportunity, for some, it might be a good time to reassess portfolios, maybe diversify more, or look for safer, long-term investment options. Stay informed, it's essential to keep an eye on other economic indicators too. One signal doesn't determine everything, but it's a significant piece of the puzzle. But remember, investing is a long game. So, while the yield curve is a great tool, it's just one of many. Always keep yourself informed, keep learning, and stay flexible in your strategies. Alright, team, that's a wrap on yield curves and their inversions. I hope you found this enlightening. If you did, give this video a thumbs up, share it with your friends, and don't forget to subscribe for more insights. Here's to making informed investment decisions and marching towards that financial freedom we all dream of. Cheers.
Please don't forget to subscribe to the Millennial Capital YouTube channel. See you next time.